All right, what's going on, Discord and YouTube family, and welcome back to another edition of Top Down Analysis with me, T Hobbs. Today is Sunday, November 2nd, 2025, year of our Lord, and as per usual, we'll be breaking down the E-mini S&P 500, the E-mini Nasdaq, and the E-mini Dow Jones futures. As you guys know, last week I gave my analysis. The analysis turned out pretty well. I believe the S&P came within like 7 points of the bullish weekly projection. Nasdaq hit the weekly projection bullish, kept going by about 100 points, and then ended up falling back and closing around that weekly projection. Then the same thing for the Dow Jones. So everything's moving the exact way we expected it to move based off the higher time frame. So as per usual, we're going to start with the higher time frame, breaking down the analysis from there, and then moving on from there. Give me a second. I want to check this. Okay, we're good there. All right, cool. Oops. Nope. There we go. Much better. All right. So, sorry, I had to deal with the Manocaster. So, let's get started. Jumping right into the S&P 500 on the 3-month chart. So the S&P 500, as we spoke about before, we look at the higher time frame on any instrument because that's going to give you an idea of what the lower time frames are doing, right? As you start to drop down to the lower time frames, then you can get an idea of how it's being delivered, but ultimately it's going to follow the higher time frame analysis, right? So the 3-month candle hasn't finished yet, but still I like to take a look at it, just to make sure we're still moving in that direction. We still have the higher low being placed. The higher high is being respected by the fact that we're still holding above the previous all-time high. So that's all I really look at on the 3-month chart. We drop down to the monthly candle because this is important because the monthly candle has just completed, right? So you want to see what we did, like what did we accomplish? Well, we made a higher low, we made a higher high, and then if you take our Fibonacci retracement on the previous month, we go from this low to this high, and we just take 30%, 50%, and 61%. You can see 51% or 50% to 61%. That's considered the golden pocket, and all we did was tap back into the golden pocket and then go higher. Therefore, the market is still in a strong uptrend. Like, I don't care what the news says or doesn't say, the market is still in an uptrend structurally. And until we see that trend breaks, there's no reason for us to believe that the uptrend is going to stop, right? So at the end of every month, you remember these levels as I bring down my top-down analysis on the 4-hour, but I want to make sure you understand the why behind it, right? So if we look here, we take that same Fibonacci retracement. I'm looking for either a retracement into 30% of the previous month, 50% of the previous month, right? Or even down to 61%. A deep retracement would put us back into the wick of 70% for a strong uptrend, which is what we're experiencing right now. I don't really want to see a 70% retracement, or I'm going to start to look at the market a little bit weaker, right? But for the most part, coming into November, I'm looking for just short retracements into the 30% area, 50% area, 61% area before we start trading higher, making new all-time highs in November and December, following the structure of the 3-month candle. So the monthly candle, you have to give the nod to the bulls because they made a higher low, they made a higher high. It's that simple. Drop down to the weekly time frame, and again, this is where everybody's going to get very bearish. It makes me very bearish to see this candlestick, but I'm going to trust what I'm seeing on the higher time frame, right? That's it. That's all. How many times have we seen this candle and then that candle just get ran? Doji candle at the top of trend, get ran, dump, and then go higher, right? Every time we see this candle or some version of this candle at the top of trend, it's always on a Friday, right? It's always the market's done, made an all-time high Monday through Thursday, and then Friday to induce the sellers going into the next week, they give an aggressive sell, and then next you know, everybody's entering into puts and trying to swing them, thinking that they've caught the top of the market, and then that's just easy liquidity to get ran inside of Tokyo and Asia and London, right? So before you know it, you wake up and we're at all-time highs again. So ultimately, just go for what it actually presented. Forget about the pattern for a second. Yes, this is an inverted hammer. Yes, this is a bearish candle, but we're not in a bearish trend. We're in a bullish trend. So a lot of these candles, you just got to read them for what they are. We gapped up the previous week. The new week opening gap was retested toward the end of the week, and we found buyers, and we ended up chilling right at the equilibrium of the weekly candle, a little bit below the equilibrium, right? So what does that mean? It means that the market brought a higher low and made a higher high. Did it close on either one of those areas? No, but you have to give the nod to the party that's been in control this entire time. No way am I going to look at this as it's the top of the market. Not yet. Could we continue to retrace? Absolutely. But is it the top of the market? I can't definitively say that until I see this candle or the next few weeks break through the structure of the market. Okay. So although this is a bearish candle, I'm still giving the nod to the bulls on this bullish time because of the bullish time frame. I mean, the bullish trend of the market. All right. So let's go down to the daily time frame. And again, you see the same thing. The market is trying to sell off, but is it really trying to sell off? Like, it made a new all-time high, and then it comes down. But look, we buy up at the lows. We go up higher, and then we go down and we buy up at the lows. We go back up. We fail to make a new high, but we're still buying up from the lows. When I see a downtrend, I want to start to see some strong candles or at least some level of structure being built. And the market is just not providing that. It's just not. As much as I want to be a bear, right? I'm with you guys all the way, right? Like, I know that you're tired of seeing the market just crawl up to the highs, but that's what uptrends do. They kill the volatility. People buy very slowly, and then they buy in spurts, right? As opposed to when the market is a little bit more bearish, the volatility kicks up and we get larger moves much faster. We're not getting that. So we got to play what we have. Ultimately, though, this level right here is what I'm looking for as far as retracements goes, unless we could just pop up and go higher. This level is going to be important because not only is it a fair value gap, it's below the end wall, it's also the previous all-time high. So that level is going to be between 68.12 and roughly about 67.66. And I'll reiterate that as we go down to the 4-hour time frame. But ultimately, yes, we are in a downtrend or a retracement on the daily time frame, but I'm still giving a nod to the bulls because the retracement did not accomplish anything. The NWOG is still intact. As a matter of fact, if we turn on my little NWOG indicator and analyze what the NWOG is doing, we're sitting right inside of the previous new week opening gap. But we also have 3 NWOGs above us or below us before price can truly turn bearish. And every time we've gotten these opening NWOGs, they've caused new highs to occur, right? This was a new high that occurred off this NWOG. The last week, this was a new high that occurred off the NWOG. And then this week that just passed, we gapped up and then we created a new high. So if every time we open up with an NWOG, and we know this one's going to open up, it's kind of like a double NWOG, right? Every time we're opening up with these NWOGs, we keep making new highs. So is the market truly trying to sell off? My answer would be no, because we just continuously make new highs off the new week opening gap. So I'm just going to continue to play the market that way. Let's drop down to the 4-hour time frame. And again, I'll bring out my levels for the week, and I'll discuss kind of my analysis for the weekly projection before we move on to the next instrument. All right, we come over here to the 4-hour time frame. I like to drop down to the 1 hour just so I can explain it a little better. The levels come out a little bit clearer. So what do we have? We're below the weekly fib, which means we're below the equilibrium for the week on the higher time frame. Discount. We're below the daily fib, which means we're below the equilibrium intraday. Discount, right? And we're inside of a new week opening gap. Discount, right? So it's clear to me that the market is in discount. But the question becomes, can we go deeper, right? Can the market trade lower to satisfy the monthly candlesticks? And that's what I'm looking for the market to do, whether it be a quick drop, a gap down, whatever it is, right? I want to see the market trade into these 30% and 50% levels in order to trade higher. It doesn't have to, but that's what I would like to see, okay? So if I want to see the market go higher, I want to see the market trade down to come up. Below us, we have a 4-hour demand at 67.9975. If you watched the previous video, This was literally the exact spot I thought the market would come to last week. We didn't quite make it there. So it's still the same plan because the market is continuous. We're looking at about 2.4% plus or minus back to the upside. So we're looking at 67.99, 75, targeting 69, 65, 75 to the upside. If the market can't get back below the in-wall and it holds price inside of this area here, I still want to see a slight retracement back to the chessboard low, going up 2.43% to 7,975. So this week we could have a $7,000 or 7,000 point S&P 500, which would be crazy, right? So, but we're getting to that year-end target of about 7,500, I believe, is what the most analysts are calling for. So honestly, like this is right on path for what they're trying to look for this year. So the bearish projection, right? Again, it's plus or minus 2.44%, 2.4%, somewhere around there. Looking at a retest trading up into this 1 hour resistance, closing this inefficiency over here at 69.4375, trading back down into 67.7825 or retesting the demand zone, right? Now, if we go down here first, then it's still going to be bullish to me. But if we go up first and then start to come down, then I'm looking for bears to take over targeting this level. Because again, 30% fib is in here and now 50% monthly fib is here as well. So if we trade up the secondary level, if we can't get back up here to close this inefficiency, then I want to see us trade up, retest the weekly fib chessboard high area at 68.9875. And then we trade down 2.41% into 67.32.25. Again, retesting that previous in wall, getting below the 50%. And all of this area, monthly settlement, in wall, this would all be the golden pocket because this would be about 61% on the retracement side for the month. Coming in, putting in that low of the month, that monthly wick would make the most sense. But this market hasn't been really making sense all year. So we'll see exactly how it develops because they could just gap it up and just keep going, right? So those are my levels for the S&P 500. Let's move over to the NASDAQ. All right, moving over to the NASDAQ and taking a look at the 3-month candle. Again, still 1 month and 30 days left. But of all the instruments, the NASDAQ has been the most bullish next to like the Dow Jones coming in second, I believe. And I mean, what more do you need to say? What more can you say about the 3-month candle? Like it's only up, right? Like, and are there some slight retracements on the way? Is the selling aggressive up here? Yeah, because we're in major premium. Like people are trying to start sell positions up here. They should. But even if they're starting sell positions, the market is still grinding higher through those sales. So the 3-month candle hasn't given me any reason to believe that we're going to fall anytime soon, right? At least for the next 2 months, right? We take a look at the monthly candle. We analyze the previous month as because this month has just ended. Let's see where we tapped into. I told you that the NQ was going to be the more bullish of the three because of the fact that tech is leading this charge. And you can see that the retracement tells the truth. The retracement on the NASDAQ is the slightest retracement you can have, tapping into 30%, not even tapping 50% before immediately finding enough buyers to push us much, much, much higher. Higher low, higher high, the uptrend is still on. I don't really care what the weekly and daily candle is doing. I care in a sense that I'm gonna pay attention to it and analyze it. But from a sense of the overall, view of the market's bullish, right? Will we get a retracement? I don't know. We should, but I mean, again, the market is irrational right now. I believe that, but you still need to follow the trend of the market if you want to be on the right side of price. Therefore, what did we do here on the weekly time frame? We had a new week opening gap. Again, I'll turn on my in-wall indicator because it's just easier that way for me. And you can see we tapped right into that in-wall just barely, and we're still holding above it, just indicating that it doesn't even look like we want to trade below this and retest these highs right here. But that doesn't mean we can't do it, right? But ultimately, the nod goes to the bulls on the weekly time frame. Again, in comparison to the ES, even the candlestick structure doesn't look bearish on the NASDAQ. Are there a lot of selling here? But look at the base. Like, what did they do at the lows? They held the lows very, very strongly. As in comparison to ES, it still held the lows, but it wasn't a stronghold. But I mean, it held the lows. So that's all you really need to know, right? So All right, moving down to the daily time frame. Again, we start to look at this and people will try to squint their eyes, hold their breath, and say, it's bearish. And I just would disagree, right? Like, again, until the market can prove to me that it can hold it won't support an all-time high, meaning it will trade below this and get below this candle here from October 10th. Every time we make a new all-time high, aggressively we sell off at some point. But every time we consolidate and then we buy it back up. So until the market can close below one of these all-time high breaks, it's, to me, it's just it's on repeat, right? So the level that you're going to be watching to hold, right, is the previous all-time high, right? And you start to look what lines up with the previous all-time high, where there's a daily demand zone there, there's a new week opening gap there, and then if we push below it even slightly, we have an in-wall, a new week opening gap there, and then right below it we have another new week opening gap. So it's like, it's almost, the market has built so much structure that it's going to take some level of fear to get below these structures. When that fear is coming, then I mean, it's anybody's guess, right? Like, anybody can guess, but we won't know until it actually happens, right? So the nod goes to the, on the daily candle, the nod goes to the bulls, even though, yes, we are experiencing a slight retracement, but that's all it really is a slight retracement. All right. Moving down to the 4-hour time frame. Again, I'll bring out my levels for the top-down analysis and my weekly projection on the week. I'll kind of explain where my levels are, what my levels are, and why they are there. So again, the equilibrium, right? 50% daily fib, we're below it, discount. 50% weekly fib, we're below it, discount, right? Like, the market is still is still at discounted prices from the previous week and the previous day. So again, you should be looking, the market should be looking to push back up. So in order for it to push back up, we still like the market to come down first or gap up. So if it's going to trade down into the in wall at 25,615 is where I would like price to go. Basically right in the middle of this in wall here at 25,615. We looking at about 3.06%, targeting back up to all-time highs at 26,398.25. If we can't get even that low, because again, I tell you, the NASDAQ is very, very bullish. If we can't get that low, then I'm anticipating a trade back into 30% of the monthly fib, or the 30% monthly fib, which sits at about 25,766. There's also a 4-hour demand here, targeting up 3.04% at 26,551, which is where my ATR, or the 1.4% level, sits for the week. To the downside, I want to see the market trade up to come down. We have this slight inefficiency here on the 1 hour, which is where my 4-hour resistance zone is sitting. So from 26,356, I believe, 2.98% down will take us again to that exact same level that I just explained. For the bullish side, 25,572 would be the level. And then if we can't trade up into the 4-hour when we leave this inefficiency open, then I would anticipate the market trading into the chessboard high, slightly into this little inefficiency here. But I got the level at 26,108.50, targeting 3.01% down to 25,330, which again would allow for a pullback into the 50% of the monthly fib. The previous month, 50% would be set. Remember, this is the start of a new month, so a wick needs to be set one way or the other, unless we create an imbalance, which would be indicated by a gap up and or a gap down. So those are my thoughts on the NASDAQ. Again, I would also add, which I talked about in my last video, I have a 3-month target of 12.33%, which is at 27,137.50. We have about 2 months left in the month. So if you do the math based on where we are, we're moving about 3% per week. So at some point, we're going to probably get, 3% per week would put us at about four weeks to get to this target. So in between there, we're going to get some major pullbacks, right? If my analysis is to plan out, but it's going to take us probably 8 weeks to get it up to this level. So those are my thoughts on the NASDAQ. Again, we'll move over to the Dow Jones. All right, breaking out the levels for the Dow Jones on the 3-month time frame. Again, we don't have to continue to beat this dead horse. It's very, very bullish on the 3-month time frame. Continue. Let's move over to the monthly time frame. Again, we'll check the previous month's candle. turn our magnet on and see how deep the retracement was, because it kind of gives me an idea of how strong the uptrend is. As I stated before, the Dow Jones is moving further, but the trend in return in regards to retracements, we're getting a much deeper retracement. Does that indicate that the trend is getting weaker? I don't know. It's hard to bet against bulls, to be honest, but this does concern me that we needed to retrace all the way back down and give a very deep retracement into about 80% of the previous month before we did find buyers, right? And the result was phenomenal. So you can't really you can't really be upset with this result, because these buyers were deep. These buyers were strong enough to bring a new high. So again, you have to give the nod to the bulls on the monthly time frame. All right. We go down to the weekly time frame, and again, we get that same kind of look that ES is presenting. But again, this is still a bullish candle because of the fact that this candle created a new low, a higher low. It created a higher high. Can it start to trade down? Yes. Into the imbalance it can go, sure. But guess what? The only thing that's in the imbalance is the previous all-time high, right? If you look and see where we are, what we're doing, even if we trade down into this level, that's exactly what the bulls want. So I would be looking for a retracement into this level. And then as long as we don't break below October 6th candle, then it's just going to be higher prices. That's how I'm looking at it, right? And so far, the candles, the trend hasn't been wrong all year. So why fade it now, right? All right. Now we look at the daily time frame. I'm sorry, that was weekly demand down there, but we look at the daily time frame, and what are we doing? Yes, we're getting these strong wicks at the top. I see this, right? But until these wicks actually give me something to break of structure, like this little level here at 46,878, this is what I think the market would want to come get before it comes back and takes out these wicks. So maybe we get another week of consolidation before we get the manipulation down into this level, right? But as long as this gap is intact, we're not even going to smell this level, right? So I would be looking for a retracement down into this level, because I believe that that gap needs to get filled. When it gets filled, your guess is as good as mine. But I'd be looking for a retracement back into this level here at 46,944. Again, I'll break it down a little bit more in depth, but ultimately you have to give the nod to the bulls on the daily time frame as well. We go down to the 4-hour time frame again, and we'll bring out our levels going into the week. But before we do, I did want to take a look at the new week opening gaps on the Dow Jones as well, because again, they kind of tell the story. New week opening gaps are used for institutional support, institutional resistance. If we look at these big players, right, where are they placing their money? They're placing their money to the upside. And you can tell because the new week opening gaps are creating support. They're not creating resistance. The gap from down here, right? They gapped the market up after selling it off all day. Everybody was calling for Black Friday. I even put it on my thumbnail, but when you came in here, I told you, I'm just joking. I'm clickbaiting you. Of course we're going higher, right? At least that's my thesis, okay? So then we put a double bottom off the end wall. We go push up. We end the week at the high. We put another end wall again. We break the high again, come back and get close to the end wall just to trade higher. We get above the end wall. We create another end wall, and now we're doing the same thing. So as long as these end walls are continuously telling us that buyers are very interested at these levels, you have to believe them, right? No matter what you think of me, right? Look at the chart, right? Like, don't worry about what I'm doing, right? Look at the chart and see and ask yourself, what is the most probable thing for price to do, right? And if end walls are pushing price higher, the most probable thing for price to do is to go higher. But you know, you make your own analogy from there, right? Maybe you want to short the market all week, and that's cool. Like, do your thing. But anyway, what are my levels? Well, if I'm bullish on the market, again, plus or minus 2.34%, I want to see the market trade down and or gap up to get there. Okay, so the 4-hour support beneath us, that's this little bitty purple line down here, right here. This is right below 30% on the previous month. So again, 30%, 50%. These levels are important to me on a monthly time frame. So they're definitely going to be important on the 4-hour, 1-hour time frame. So I'd be looking for the market to trade back down into this level, hold 47,239, and then target 2.34% at 48,345. If we can't even trade back to 30%, remember we had a deep retracement last month, so we may not need a deep retracement this month because the bulls have gotten stronger after stopping out so many sellers to the downside. Okay. That being said, we could just close this inefficiency here inside of the chessboard low at 47,607, targeting 48,714 or 2.3% back to the upside. Again, hitting all-time highs. To the downside, what am I looking for? There's an inefficiency here on the 1 hour time frame, roughly at about 48,092. So if we come up here, I want to see us trading down into this 4 hour demand zone, breaking through the 30%, breaking through the 4 hour, and then targeting the 4 hour demand zone, which sits slightly above the 50% monthly fib. Again, a very good level to be a buyer, in my opinion. All right. If we can't get back up to the resistance zone and we can hold price below the previous day high and stay below the weekly fib or the equilibrium, then I want to see the market retreat from the chessboard high down 2.32% into 46,757, which again would put us in line with that 50% monthly fib retracement. Our monthly settlement level is here. Our monthly fib is here. Like, there is a ton of reasons for you to be a buyer here. The in-wall weekly settlement, there's a stack of liquidity that's going to be here. So if the market comes down here, I'm going to get very, very bullish, and that's what I'm going to be looking to do. If it gaps up from here, these monthly or these weekly projection levels, they will get pushed up, but it will still be the plus or minus 2.32%. It'll just be from the gap up. Okay. So those are my levels on the Dow Jones. Again, not much news on the year or on the week, probably on the month, to be honest. I'm nicknaming this month No News November, but we'll still break down the volatility index before heading into the news. Okay. So on the VIX, again, oh man, I really wish you guys could go back and watch the videos, or you would go back and watch the videos, because I'm saying the same thing in every single video and it's playing out like every single time the exact same way, right? So what are we looking for? I said we'd be looking for the VIX to gap up and then target the weekly fib. We went right to the weekly fib, and guess what? As soon as we targeted this area, the market found buyers, right? And then pushed the market higher. Well, that's exactly what we did, right? We came up here, right? We pushed into this level and then we found buyers, and then the market sold. I mean, the VIX sold off. So what's the next thing for the VIX to do, right? I've talked about extensively talked about this level down here, and I'm going to say it again. Until the VIX gets back down to the 15s, right? On the weekly time frame, okay? Specifically on the weekly time frame. Until the VIX gets back down to the 15s, I don't expect like the black swan event to happen. But this is a good sign. The extreme rally on the week of the 6th, tapping into the daily fair value gap, made a new high. So I'm anticipating these lows being swept. And like I have written here for the last 2 months, when the VIX taps into this 15 area, it's going to be a good time to buy calls on the VIX. And I think that's going to be the top of the market. That's just my thesis. We'll see exactly what it looks like. But if I'm going to remain bullish on the market, then that means that I have to remain bearish on the VIX. And all I'm looking for is downtrend signs. Well, from here, we made a new high. We dropped below the lows. We made new lows. We came back up here, retested the inefficiency, and traded lower. Then we came back up, tried to retest the inefficiency and failed. So as long as that continues, we're in a downtrend on the VIX. We're trading up to come down. We're trading up to come down. So that means the market is going to be trading down to come up. So I'm watching this in-wall. If we get below this in-wall and the monthly fib, then my thesis is that we're heading back into this green box and the market's going to continue to go to all-time highs. That is the support thesis for my analysis. Now let's move over to the news on the week. For the week, again, it's No News November just because of the government shutdown. And we would normally be, very excited about news this week, but we're probably only going to see one until the Republicans, Democrats can agree on whatever it is they need to agree on to open the government back up. We have ISM manufacturing on Monday, which is red folder news. We go into Tuesday, and again, This would be a day that we would be expecting JOLTS or job openings reports, and we're not getting them. And to be honest, I don't think we want to see them, right? Because looking at all of the announcements via the larger companies, Amazon, Apple, Microsoft, all announcing massive job cuts. That's in the private sector, right? Like those are like, you know, the big wigs are they're going to lose their job, but their compensation is going to be so crazy it's not even really going to matter. But that's going to be a sign for the smaller companies to start cutting employees as well, because they're going to see the bigger companies do it. And that is what's really going to scare the market when they see these job numbers, in my opinion. So we'll see exactly how it comes out. If we ever get them, we'll know. But the private sector we will get on Wednesday, November the 5th. And this will give us a look into how bad it really is. Our previous was a negative 32,000. And the expected was supposed to be a positive 20,000, I believe. So now the forecast is, for some reason, 28,000. If this number comes in negative again, it's again going to show you what the true, like what's really happening behind the curtains. I don't think it'll change the trend of the market, because I think we're going to finish the month off bullish, or at least consolidating. But I think it's going to start to give you an idea of how bad the economy, right? We go into Thursday, and again, this is usually when we get unemployment claims. We ain't gonna get it unless they open up the government. It just ain't gonna happen. So ultimately, there's no news, right? Like there's yellow folder news and stuff that you probably don't care about, like natural gas storage. I don't care about that. But for the most part, we're not gonna get anything that's of any importance. There's no earnings, there's no news, so you can expect chop all week, right? Like that's gonna be the forecast, right? So again, Friday's supposed to be core PCE with no news. November, right? Non-farm payrolls is a nothing burger. Unemployment rate is a nothing burger. It doesn't mean the market is not going to move, because in my opinion, all of these things are going to be priced in anyway. They just use the news announcement to really go crazy, right? But that's not going to change the volatility. It's not going to change how the market truly moves based off the algo. So definitely go back and study how the market moves off non-farm employment changes, or non-farm payroll is what it used to be called, to kind of get a good idea of how price should be trading on those days. But for the most part, man, that's all I really have on the top-down analysis. Again, I hope this is being helpful to you guys. If so, please make sure to tip the barber, aka hit the like and subscribe button. My name is T Hobbs. This is the Trader Shop, and I'll catch you guys on the next one, man. Peace.